Mr. Mohammad Haleem Khan joins us now, former Disinvestment Secretary. Mr. Khan, good morning. Thank you for joining us. I guess we've set the tone talking about that how difficult it is to monetize PSUs now, given that only few PSU companies, sir, have managed to create genuine shareholder wealth. Others have destroyed.
I really don't know how to respond to this because see, this disinvestment has to be looked into from a larger perspective, not the perspective of the investor alone. Number one. Number two, whether we have been doing enough to create investor interest in the PSU. That is also an important factor. Now, just as from some gentleman from the Adat Burla group said, you see, if you have got a good dividend yield, and even then the market is not responding to the PSU scripts, then I think it will be important to examine the individual cases on merits. Otherwise, by the sheer logic of the market, if you are getting a good dividend yield, I really don't know why the investor should not be interested in getting that type of yield. Maybe at some point of time, because of the taxation on dividends, and these companies are giving good dividends, so this might have had a what you can say headwind. But apparently, as an investor, if you are looking for yield on your investments, PSUs, I don't think they can be found at fault with, and they are comparable to any good scrip in the market. Number two, then you have to see the supply side of the scrips also. Since the government has gone aggressively for disinvestment, and more scripts are going to be offloaded in the market. Naturally, when you are, you know that there is a very big supply going to happen sooner or later, then the speculative element also doesn't take risk. And in that situation, even if the dividend yield is very good, the general market is will not be very positive about the script. But if you want to reach the so-called market-driven economy target, which you have been planning for almost 1990 onward, that is 30 years, then you have to push for this disinvestment.
Looking at individual examples, Mr. Khan, I mean, if you look at Hindustan Zinc, Vedanta, they are clear examples of immense value creation when it comes to PSUs with good management. How is it that we can create more of these without getting them privatized?
No, I think the returns on some of the PSUs are, maybe comparable to Hindustan Zinc also. So I really don't say that the management per se, I have been saying it earlier also, that management per se is the issue. The issue is the corporate governance. If it is good in a particular company, then the ownership becomes irrelevant. Ownership is having a very limited role so long as it is able to give that much of free play to the management and the corporate governance, then the normal market should be able to give space whether the earning is going to be good or they are going to be under pressure. Ultimately, it is the corporate governance and the market conditions. Both decide how a particular company is going to do.
So, Mr. Khan, if I look at a classic case like NTPC, it's almost it's one of the most important companies in the power sector. The stock is at a multi-year high. When I speak to fund managers and when I ask them, "Dahi sasta stock hai, value hai, why is that you're not buying it?" The answer which they give me is that that's largely because the way government has been offloading their stake in NTPC. Every year 2%, 3%, 4% has been offloaded. So do you think till the time government does not come up with a comprehensive, concrete way to bridge the disinvestment process by not going to the ETF route or by the OFS route, these stocks will remain under pressure? Because what is hurting the market, sir, in my view, is that this constant supply which is coming from the government stable.
No, I'm slightly surprised, because when you find fault with the ETF route, one has to look into what is happening globally. Globally, the capital market is shifting from mutual fund industry to ETF industry. Now, why in India ETF options are being considered as a negative when it comes to deepening the capital market, I am slightly surprised. So if you can find out some developed market where you find that the mutual fund is doing better than the ETF, then probably you might have a reason to flag the issue. Worldwide, it is known that the administration of the ETF assets are cheaper, less costlier in comparison to the management of the assets under a mutual fund, actively traded active mutual fund instrument. So ETF cannot be the reason for this. Now, with regard to NTPC, NTPC you have to see again in the larger context how the other players in the power sector are doing. If the other players in the power sector are doing well, then probably you can have a much deeper concern for NTPC. But if the government is just trying to disinvest and in the particular company, and that the investor knows that more and more supply is going to come, then it is bound to have its effect. Secondly, NTPC this time probably they are also going into the purchase of some I think NIPCO and THDC government investment.
Sure.
Now it might create.
Yeah, exactly. That's the point that we were making, Mr. Khan, that it's the end which justifies the means. The fact of the matter is that whatever is happening right now is not really helping shareholders of these PSU stocks. What, to your mind, is the best possible solution for a PSU revival in that case? Is disinvestment the only solution?
See, you have to see that for some reason or the other, the disinvestment has been visualized as a source of mobilizing resources. Now, that is something which has been happening. Actually, the disinvestment should have been done at a much, you can say, much well-organized pace. We turned from planned economy to the market-driven economy in 1990s. We have already, have 30 years gone, and still the government is doing business. So it is because of the historical reasons that there is some sort of a bunching of disinvestment which is taking place. And whenever you have a lot of supply in the market, and the market sentiment may or may not be as comfortable as you would like to have it, ideally speaking, then there has to be a pressure, and the pressure will be only on those scripts which are going to get more supply. The companies where the investor knows that there is not going to be further supply, they are going to sustain that valuation. At some point of time, you might have noticed even the best of these steel companies were available below their book value. So the market has to have its own logic, and I really don't know whether one should decide public policies on the basis of the market perception.
Thank you so much for joining us and for talking us through some of the hurdles around divestment and the way forward.